Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, July 17th at 2 p.m. Eastern. Well, the S&P 500 and NASDAQ are falling today as mounting jitters over AI spending drag tech lower, putting the index on pace for a losing week. Alongside chips, shares of Netflix are also a major laggard, falling more than 8%. As the company's forecast failed to ease investor concerns that growth is slowing. Now, first of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, as you can see, this little green candle right here, the SPY was trading at $745.99, still below the all-time high that was made back here on June 2nd, at $760. Now, as we speak here, the SPY is white-knuckling both the 20-day, the red line, and the 50-day moving averages. They're both also coming in at $745 and change, and thankfully still above the 200-day moving average, which is coming in at $696 and change. Now, if we look left on the chart, we can't see it, but we know that after climbing in a strong uptrend from April 2025 lows at 481, we know that the SPY climbed all the way up here to this consolidation. Actually, so this was right at 696, 697, and of course at that time, these were all-time highs. And then it started trading in a range here as it moved through January down to 676. So it traded in a range here. Then the war with Iran came into focus, and it fell. The SPY fell on the news of the Iran war and its inception down to 629 in March, then rebounded dramatically back up over the 200-day moving average, over the red line, the 20-day, over the green line, just rebounded dramatically, walked up the 20-day and actually traded at a premium above it practically the whole time till it got up to 760 right here. Then could not go any farther. That was amazing anyway. Dropped down here to 723, rallied up here to 757, dropped down here to 726, and then tiptoed up the 50-day and 20-day and kept tiptoeing kind of sideways here, not moving strongly, but after all, it's a little out of breath after everything that happened, until it got to today where it finally, and of course now we're starting into earnings season, it finally gapped down here and ended up right on top of both moving averages, and price itself is all at $745 and change. It does appear as though the SPY is getting a little tired here. It makes perfect sense that it would. Rallies like this are tons of fun, and you can make a lot of money, but you got to know when to get out if you're a short-term trader, and there's going to be some profit taking for sure. That always happens. So we want to know the key levels to watch next week because, as you know, price likes to go back to where it was and certainly is good at acting as support and resistance. So right now we've got this tiny little gap to fill, but we've got resistance here at 757 and of course the highs up here at 760. Then we have potential support here at these pivots at 727 right here and 723. These are both important. And then, of course, we can go on down to the prior highs at 697 now. And the 200-day moving average coming in at 696. If you can hear noise in the background, it's because I live in Florida and we're getting a huge thunderstorm pretty soon. So if you hear rumbling, that's what it is. It's a storm approaching. Anyway, we said last week that we wanted it for the market to stay bullish here. We wanted it to stay above the 723, 727 pivots here. So hopefully from my lips to the trading god's ears, it stays up above that. We'll have to see what happens, though. Also know, of course, that we are in second quarter earnings season. We've got a lot going on, and earnings season can cause a more volatile market. So please be careful. Our next chart is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the exchange-traded fund which follows the NASDAQ 100, which is the top 100 non-financial stocks in the NASDAQ stock market. It includes all the large tech stocks, Magnificent Seven, and so forth. So when we captured this chart today, the Q's down here. When we captured this chart to the Qs, we're trading at $697.35, obviously below the new all-time high that was established on June 3rd at 748. So we can see here that the Qs are back down below the red line, the 20-day moving average, the green line, the 50-day moving average, and they're both right here. That looks like the 20-day is looking like it's wants to cross down over the 50-day. That is a slightly bearish move. Both moving averages are coming in here at the $718 point right here. And of course, thankfully, we're still above the 200-day, which is down here at 640. Now, if we look left on the chart, we can't see the year-ago lows, but we know that from the Q's April 2025 low, and that was more than a year ago at 402, we know it rallied in a very strong uptrend and rallied all the way up, and then it started, we thought, rolling over to consolidate. Here are the January, at the time, all-time highs at 637, but then it dropped here down below the 20-day and 50-day, down to 594. It looks like it was just consolidating, but in fact, it had just moved dramatically higher for quite a while. So this was actually the top of that move. Then it dropped down here below the 50-day and the 20-day to 594, tried to punch back through these moving averages. As you can see, it couldn't do it. Moving averages can give strong support. They can also give you very strong resistance to the stock, depending on which side of it is that price is, trading on. Then it fell from there on news of the Iran war down here to the March low at 555. And then, like the SPY, but even more dramatically, it rallied off that low and moved up dramatically back through both three moving averages, very dramatic uptrend in April and May, and to the all-time high up here at 748, then fell down to this low here at 693, rallied back up here to 744. Bulls and bears are really duking it out here. Then fell down to the 50-day right here, struggled up to 737, then dropped to where we are now after moving around here trying to make up its mind over the 50-day. Couldn't do it, and finally fell down here and gapped down today to 697 and change. So you guys know, if you've been watching the market now, you know that for the last few weeks we've been drawing a triangle, watching it fill up to see where it was going to go. Whether it was going to break to the upside or to the downside. And today it did what we were waiting for. It broke, but it broke to the downside. Not exactly what we wanted, but can't be helped. So the Qs gapped down today, again, to 697 and change. So we want to, one way we measure strength when price moves around is we look at prior support and resistance levels. And today we'll just do a couple. We know here that the resistance here, the price is at 697. It's broken the triangle here that we had, but, it can revive. So Our resistance here over it is these lows here at 703. Of course, we have the 20 and the 50-day coming in here at 718, and then on up to the prior highs at 748. So we have potential support here. See today's low? It's so cool. It lines up exactly, almost to the penny, with the June low right there at 686. If it breaks through that next week, then we have the 200-day moving average down here at 640, and on down from there. So with all this going on, we've had a lot of up moves that are bound to get some profit taking. We've got a lot going on in the tech world, of course, we all know that, and in the entire world overseas as well. So please, please be careful here, tread carefully. Sometimes, once in a while, the sidelines are the best place to be. Just an idea. Our final chart today is a chart of the Invesco Water Resources ETF, the PHO. It has 40 holdings. Top holdings include Ecolab, Roper Technologies, Ferguson Enterprises, Waters Corporation, and IDEX Labs. So I've been looking at this many times. When the market gets all volatile like this, gets all hectic like it has been, traders tend to seek safe havens, as you know. And water, of course, is now, we're finding, being used a lot in AI. And of course, human beings need it too. So water can be a place that we kind of go if you want to stay in the market. I'm going to call it to escape, although like with everything else, we need stops on them, on this. So just wanted to let you know, when I captured this chart today, the PHO right here, the PHO was trading at $69.08. It's trading just above the 20-day moving average, which is coming in at $68 and change. The 50-day down here, the green line, coming in at 67 and 67 and change. The 20-day moving average is coming in here at 68. The 50-day moving average is coming in at 67. I'm sorry, that's down here, the green line. And the 200-day moving average, I got it, is actually overhead here at $70.20. And it is, speaking of moving averages being resistance, it looks like it's been pretty tough on the PHO for the last couple of weeks. Now, if we look left on the chart here, we see that the PHO actually made an all-time high in January at 75. Then it dropped down to its 50-day moving average, moved back up, almost got back up to 70, almost got back up towards 75 to retest it. Then rolled over, of course, on the news of the Iranian war. Then dropped down to 65 in March here. See how it bounced up? Then retested that. So price likes to go where it's been before. It retested it, then it rebounded up here in April, up here to 70. Look how it came up here to 70, then fell back down and came back up and retested it. And then it dropped down harder still in May, down here to 63. Then who knew water could be so wild, right? Then gradually climbed up in a pretty nice uptrend to where we are now. Here you go, walking up finally the 20-day moving average up to where we are now at $69 and change. So what I want to do here is show you how interesting that you think, well, moving averages, what's the big deal? But look at this. Look at this 70 line here that I'm trying to draw straight. Price likes to go back, as I said, sometimes to where it's been. So the 70 line is key support and resistance, depending on which side of it it's on. So again, with earnings season going on and all the volatility, water could be kind of a safe, I'm not going to say it's safe, but a place to maybe make a little money while the market's going wild, as long as we keep our stops in. So what I'm going to do in the coming week, if the market doesn't get too crazy, if the PHO, and obviously this doesn't have anywhere near the same chart pattern as the tech stocks or even the S&P 500, so it's doing its own thing. So in the coming week, if the PHO can stay above the 50-day moving average right here at 67 and change, if the PHO can stay above the 50-day moving average, and if you'd rather use the 20-day, you can. That's pretty tight, though. If it can stay above, for me, 67.20, I will buy a small position in my trading portfolio, and my initial stop is going to be below the 50-day down here at 66.50. If and when the PHO can climb above, and that's what I really want, I want the PHO to climb above the 200-day moving average, which is again coming in at $70 and change. If it can climb above that, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to watch the PHO in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to Bottom Fish Like a Pro, I think, is a real good one for right now. It's the perfect training to check out. In it, I show you exactly how to detect with high probability how a stock or ETF is about to wake up from an extended downtrend and finally take off again. Our new low price for this program is only $199. You should be able to make that back pretty quick, and you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. So from our ever popular flagship program, 7 Steps to Successful Trading, to certainly one of the most popular, How to Swing Trade Successfully, How to Trade the Trend to Profits, one of my favorites, How to Read Charts, great for novices and anybody who wants to brush up, 3 Winning Setups, and by the way, these are both just $59 each, and How to Bottom Fish Like a Pro. Find out how my online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen, or easier still, just click on the orange button below. Until next week, please be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.